how do you see the fintech in the next 2-3 years? Because
money had dried up. We were used to raising good capital in Pakistan, and people were looking at us as well. But
big dinosaurs, I talk of them.
but that they have the money. They have their war chest of what we actually need to create that impact. So,
what are the lessons that you learned and can maybe a fintech startup?
How could there be one winner? But that's what we were being told.
This is a capitalist kind of mindset, I think. That comes from the US and the Europe. There's like just one winner.
We were told that was a mission, that you had to grow at X speed
and be the monopole.
Exactly. Everything revolves around you.
That's a very interesting insight. I've never thought of it, but it's true.
Acquisitions would only happen once you actually are either seen as a threat or the product set has been proven to be.
I call it fund the failure.
Yeah, 100%.
Okay, let's go.
Perfect.
Hashem, thank you for being here this morning. As I was saying, it was Saturday morning. You came all the way along from Model Town to be with us this morning.
It is my pleasure.
I'm so happy to have you, since I know already that you are doing already a lot of things for the Pakistani ecosystem, and you are trying to push things in your sector in terms of fintech. So I let you a little bit maybe introduce yourself very briefly in 1 or 2 minutes, and then we'll go deep dive in some specific questions.
Brilliant. My name is Hashim Ali. I'm the Chief Product Officer for Muawin. Been with essentially Muawin is a team of 3 co-founders. Muawin's goal was very straightforward. As the guy leading product, our desire was just to work on helping small businesses scale. So the idea was, how do you help the vast majority of Pakistan businesses, which are primarily SMEs, help them with working capital that they need to run their businesses, because those businesses are doing well. They are the backbone of what Pakistan is and will inshallah be. So if you could just help them with the inventory and working capital that they would require, there's nothing else that they are missing then. So Muawin's mission was from day one very simple. We were a working capital lender with the sole purpose of helping businesses scale. Our desire was not to help people get set up. So we're never there to actually help people begin their journey. We were there to help people along their journey. So as they wanted to grow, as they wanted to improve their setup, that's where Muawin really came in. My own background is primarily from banking and finance. So started off as core corporate banking as I could with Standard Chartered, but then left Pakistan for a few years to the States. But again, that was more for education and some work. But then moved back around 2016. And since that time, it's been primarily startups. So Muawin is now my, I would say, third startup entity, which I've been either involved in as a founding member or now founded myself.
Interesting. I didn't know that about your background in startup. But Muawin, already the name, I think it exists in Urdu, but it's also an Arabic name.
It is, definitely.
It's a support.
Yes.
Being a support or a help to, and a push.
100%. So in Urdu, it means more madadgar. So it means to help. That's exactly what it is. And it was chosen for the very specific purpose. Our idea was to start Muawin in Pakistan first, because it's a massive market and a big problem to solve. But then to take it regionally as well. And we wanted a name that could hold significant emotional value
for everyone.
Yes.
For everyone in the region, at least.
Yes, exactly.
So what it takes to build and adapt a fintech product like this, especially 6 or 7 years ago, I think the situation was not the same.
The situation at that time, again, so we started Muawin in early 2018. So 2018, 2019 is when we actually started the Muawin journey. Fintech had started in Pakistan some years back. Easy Paisa, JazzCash were truly some of the earlier players. But then at that time, if you look at the region, Fintech started as more of a payments industry, where we would talk about giving people mobile wallets so they can send and receive money. That was how Fintech 1.0 was supposed to take root in Pakistan. Makes perfect sense. The problem is, if I give everybody a mobile wallet, but it has zero balances in it, it's useless. Then you're not really showing to the unbanked market what coming into the ecosystem will help them with. So Muawin's goal was pretty straightforward. That's why my focus was always on credit. Can we show people that if they come into the financial system, there are tools available that will actually help them achieve their goals, which would mean either it's wealth, it's investing, or it's lending. If you look at the markets that we aspire to be the more developed markets, everything from your mortgages to phone financing to e-commerce finance, everything is finance. You have a good credit score, and then once you're in the system, you're able to achieve a quality of life is based on the back of what credit you can get. In developing markets, that is not what we have. So it's either you're buying on cash or you're buying on the assets that you are making. So your life actually becomes much more tricky. So building up assets like a car or a home or even a business is it takes a lot of time and a lot of effort. So when we started Muawin, the goal was focus on one thing, focus on credit, and then be a supportive entity. So as Muawin was at that time, the second or the third regulated lender in our market, so which means I got my own license, which meant I only had a license to lend, but then I would work with other mobile wallet players as well to get repayments and actually send out our credit as well.
Because there is different license also in Pakistan. Yes. I'm discovering them, the EMI license.
That's a mobile wallet license.
And so you are under another license, type of license?
So we are regulated by SECP, Securities and Exchange Commission of Pakistan, and we have an NBFC license, non-banking finance company license. So we can do one thing, and we do that one thing very well, which is lending. Which means that I have to work with other players in the ecosystem to deliver my service. Which means if I want to actually get people to repay me, I have to go to different mobile wallet players, which means I am actually then a value add for others. That's the rising tide.
So you are a chain in...
Exactly. That's
in a kind of value chain.
Exactly.
Of the ecosystem. Okay. And how we imagine a go-to-market in such market that seems so complicated.
Yes.
And you don't know, you need credit scoring. I know in the US and Europe, they do like credit scoring. Will people give back the money or no? So it's a little bit challenging situation. You need to help the businesses, but still, am I going to survive?
100%. So it's essentially understanding where the market is at and not trying to maybe train them for too many different actions at the same time. So when Muawin started to think of what service or product to offer, we started in the retail space. So it was small mom and pop retailers, your local grocery stores, your local even tobacco shops, everywhere in the local ecosystem where localized trade happened. So those guys are all based on cash. They will buy whatever inventory they want on cash. So we understood that if we could just plug in, bring them into our ecosystem, get them onto our platform, and just help them with that one core purpose, which is buy whatever, get whatever inventory you want. We will pay your supplier, so you get your items without any fee, exactly what you need, and you don't have to worry about, okay, do I have money in my pocket right now or not? Then your cycle can start, and you start selling, and you make money, and then
you pay us back, or you pay your supplier back.
We helped you run your business better, your affinity with my service goes up. So I'm actually showing even as a lender, because lenders in our local market are viewed slightly negatively. It is not, bankers don't really have a very good sort of brand value. But because we were directly helping you run your business better, we were able to create a positive affiliation with you. So that was the goal of our product market fit. Can we show whatever business we go to, whatever vertical we go into, our goal should be that the borrower has to be better off with our credit than he was without it.
Of course.
So which is a very high bar to meet in terms of lending, because the thing is, I gave you a loan. If let's say it was for just a consumable loan, you took it, you went out to eat, and now when I come back 30 days later to get my money, you don't really remember what service I gave you, because again, you used the money. It's gone. It was seen as an expense in your mind. With us, because I helped you run your business better, and if you actually made more money at the bottom line, then there's that positive affiliation with us. And which is why then Muawin was able to create that sort of niche for ourselves in the local market. Because all of our borrowers were first-time borrowers. They had never had a credit score. They were never touched by banks. All of our credit borrowers were new to us and new to the market. So we had a very high responsibility to actually give them credit scores. So Muawin, as a licensed lender, would report all of these loans to the credit bureaus as well. So be it our local credit bureaus, there's a few that we would then report to and actually help them come into the system. So now we were seen as
onboarding them in the system, actually.
And that's again the chain analogy that you were using. That's the role that we take in the local market.
So what is the value chain? Because I feel it's quite complicated, the value chain here in Pakistan. Please, can we explain it to a teenager?
Value chain in what perspective? So
in terms of fintech, because you told me like you get integrated as a technical brick also in the technical and functional brick in the ecosystem, but from where it starts and where it ends.
So
Because you're talking about unbanked people, sometimes like they do a lot of unconventional financing, I think, maybe family and so they will never use maybe banks, or
they don't
never had a bank account, and just like the money is in the black market, I would say.
So the interesting thing is, Pakistan, and if you do local research, you will find this very easily. Pakistan runs on credit. Everywhere that you go, and especially if you look into the grey economy, you will find all of our customers, all unbanked individuals, they do have some sort of unstructured credit available to them. If you go into our local markets, you can find whatever motorcycles you want on credit. So BNPL in Pakistan has existed for many, many years.
Forever, okay.
We have formalized it now. So you've given it a brand, buy now, pay later, brilliant. And we have now consumer-facing BNPL companies that are doing very well, and they should. But the thing is, unstructured BNPL has already existed. So which is why I said that we are taking the same services
in the
small
market. Shops, they will like, you buy the sugar and you will pay it after
in a few days
at the end of the month or something.
So that was actually the problem, because the shops were giving credit to their consumers, but they themselves weren't getting credit. So then they had to deal with this distributor. Okay, I'll pay you 2 days later, 3 days later. So they were trying to always manage a receivables and payable cycle. That's where Muawin would just come in. So we're understanding what's happening in the local market, not breaking the system. You have to understand that these users or borrowers in our sense, they again have those services available to them from the grey market. You have to show that we are, if not better, but we have a pathway for them to get more in the long run. So if they come to us, they're getting loans.
Stress-free, maybe.
Stress-free is
sometimes they are
formal can be more stressful, because again now they know that they can be reported, and it's a high responsibility on them. But down the road, some of our borrowers have been able to get car financing. If they never had come to Muawin, no bank would have touched them, because we actually reported them to the credit bureau. Banks were able to access those customers as well, which is the final financial inclusion staircase that we really talk about. That once you start your journey, if you're being a good financial market participant, the market should open up to you. So now you should be able to go into a mutual fund and open up your account as well and start investing. Again, our borrowers who are financially excluded, first-time borrowers, would never understand this, because the market has not worked for them yet. Their own local systems are, but the market as it is structured has not really been welcoming to them. So that's the role that all fintech players have to take, is that we showcase why the formal market is better, give them use cases that they need, and slowly take them on that education path. Okay, fine, now you've taken this loan with us, or if it's a BNP loan, or if you open up a mobile wallet account, brilliant. Now maybe you need a savings account. Fine, let's take you to a bank, or maybe we should be the ones doing those services. Or now do you want to start investing? That's the pathway to that. So slowly you bring people into the formal system, but you have to prove that null hypothesis that the formal system is better, because their local system is working for them.
What local consumer behaviors had surprised you when you've been doing on the ground?
So there have been lots of surprises during the last 5-6 years. Yeah. The interesting thing is, and standing
maybe in comparison to global market, because you've been also
global markets is, I would say, the most surprising thing, and this comes from because again,
cultural background, maybe
cultural and privileged background. So we have, again, most founders in Pakistan, many of us do come from slightly more privileged backgrounds than the customers that we serve. So actually getting into their heads sometimes is a difficult journey to take. But if you were to talk to any seasoned banker, any fintech lending product that we were offering in Pakistan, especially Muawin dealing with first-time SME borrowers, they would say these guys will definitely default. They're bad customers. Don't deal with them. The funny thing is, our borrowers have, by and large, been brilliant. They do not default, because at the end of the day, they're the ones running their corner shops for the last 20-30 years. They actually turned out to be brilliant managers of credit, primarily because that was their businesses were their entire way to actually serve their families. So if their families were eating, if they were going to school, that small corner shop that we were looking down as, it's a small little business, it can't really be a business, it's not scalable. No, but that's what he's using to actually make sure that his family is happy.
Of course.
It's what their entire life revolves around. So the fact that we could actually enter and give them credit and actually help them improve their standard of living was a big, not just a responsibility, but a big actual thing of pride for us, because again, the borrowers should be trusted and they were doing very well. And we've been lending to ride-hailing drivers. All of our ride-hailing drivers again have been brilliant credit borrowers, primarily because again, we understood that you might not think of a Uber driver as a business owner, but at the end of the day, that's his mentality. It says the car is his asset. He needs working capital to actually execute his business more. Why wouldn't you help him? It's just understanding and giving again first-time borrowers, people who are outside of the system, just that respect and just that understanding that again, these are business owners. Business does not mean a workforce of 50 or 100 people. All of these individuals that are working primarily in the gray sector should be trusted and deserve a way to actually get formal support from the system. That's the role that frankly most
bring
fintech,
them to light.
Exactly. That's the role the fintech ecosystem has to play.
Amazing. And how I'm talking about also the regulations and the compliance, have they affected you in, I guess so, in the product design first?
So again, so if you ask a historical question versus till today, when we started in 2018, again, as I said, we were the second or third one to get our license. At that time,
so are like disruptors.
Yeah, we were one of the initial ones to get started in this space.
All right.
The regulator has been supportive throughout. So Pakistan regulatory system is broken up from a fintech perspective in two entities: State Bank and SECP. State Bank deals with deposit-taking institutions, so EMIs that you were talking about are all State Bank. That's a high bar because State Bank, at the end of the day, is the arbiter, is the protector of public money. So it's a very different ecosystem. SECP looks after non-deposit institutions. So that's where your insurtechs and your wealth companies and your brokers and your lenders come into it. So we've had immense support throughout. I would never say that the regulator, frankly, has been very supportive from day one of these things have to happen. How can they help the startups actually achieve them? Having said that, as a regulator, they do have certain responsibility for ensuring that the products are delivered in a scalable and safe way as well, because they have to understand that even though we want to be disruptors and we want to go fast and actually move things very quickly, the market might not be ready for those changes as well. So there's a back and forth that happens throughout. Product design wise, I have never really felt that the regulator was stopping us from doing anything, but again, they have over time, as newer and models have come in, you've seen nano lenders come in, you've seen BNPL, consumer BNPL companies come in over the last 4 or 5 years. The scale of change has shifted quite considerably. So the regulator now has to, again, is always playing catch up, sadly, because again, they're struggling from that point because they're understaffed as well.
It's better, I think, to innovate than regulate. That's the other way, because in Morocco, we have that problem. We need to regulate then innovate. So it's like it's blocking.
So yeah, in Pakistan, it's moving in a very, it's not the same way as in Morocco, because we are allowed to innovate first, and the regulator then does come in and say, okay, fine, could we tweak this in this certain way? And they've opened up regulatory sandboxes which allow people even without a license to come in, get set up and start to show progress. So they're now looking at crowdfunding, crowd lending, their different asset tokenization. There's a lot of work the regulator now is just saying, start it, brilliant, offer the product. If it makes sense, bring us those results, do a pilot. Maybe we'll give you a license if you're actually able to help the market. So thankfully, it's been brilliant throughout. And again, hopefully this continues because Pakistan needs a lot more players.
We're still talking about 40% unbanked population, I think, especially a rural area, I guess.
So even those standards are extremely generous. I would argue, because again, we 50. Say now 60, even less than that, primarily because we are now talking about, again, mobile wallets. How many services can you actually offer through a mobile wallet? When you say mobile wallet, yes, you can say I can do payments.
You should have money first.
Yeah, exactly. And if you're just sending and receiving money, perfect. You are now in the system, and you can now be traced through it. But again, does the system allow you to then, again, as I talk about that ladder, are you able to move up? Are you getting credit then? Are you able to get your house financed?
Improve your life.
Exactly. That's where the actual financial inclusion metric comes in. So it's unbanked, then it's underbanked, then it's included. So even if you use that 40% unbanked metric, they don't have any services. And then when you come to the 60%, you talk about underbanked and then banked as well. So let's say if you take us in this room, for example, we might have access to credit cards and different payment instruments as well. And I've been given, let's say, credit cards from 5 different banks. So that means I'm being counted 5 times in the number of credit cards that are issued in Pakistan. So there's a lot of double counting going on as well. So good changes are happening, but we cannot sit on our laurels at this point. So there's a lot of work that needs to be done. Even from a lender's perspective, I would argue that there could be 10 more Muawins in Pakistan and we would still not be able to actually scratch the surface, because the market is huge. And it's not just the recorded market. By all standards, the reported market sizes that we have, the formal economy, the gray economy is twice that. So which part of the market are you even targeting? Most fintechs go into the gray economy. That's where our bread and butter is. That means
this is more complicated.
Exactly.
Also to
your
get
cost to serve goes up, your cost to actually operate in those areas goes up, your risk parameters change quite heavily, and that means the way that you deliver your services have to change as well.
And it's also a very on the ground. You need to go and meet people.
100%.
You have no choice, actually, because they are not even maybe digitally connected somewhere.
Exactly. And that's, I think, the biggest challenge. The biggest challenge that I actually have felt is the fact that if you talk to an international investor, international, so let's say fintech, the idea is always you create a decent digital platform. And there's a certain way of scaling it that is allowable. In developing markets, that really doesn't hold true.
It's not work.
Because there's a lot of, you can make a pretty app, brilliant. Our app was designed in Urdu for the first, as in we were always supposed to be in Urdu, because our local users understood that. They couldn't really understand lending terms. If I used hardcore English terms, how could I explain what a loan tenor should be to you?
So it is lending in Urdu?
As in, that's Qars, but it depends on how you want to structure it.
Okay.
But so we structured it as more of a Sharia friendly way. So we would just try to give it to them as, that's why the inventory aspect came in. That we wanted it to be, again, we wanted no barrier between a user actually liking and wanting a service and then actually then using it. So if we made it more inventory focused, it meant that we would never really hurt anybody's religious sentiments as well. So it became much more open to everybody. But the biggest challenge, as you mentioned before, is that learning and education aspect that has to go along with it. So you create a digital platform, brilliant, the app is there, but there's a high level of OPEX, operational, on the ground, talking to users and actually getting them onto the platform as well. As the market evolves, that will change. I'm not saying this will be the same in the next 5 years or 10 years. But right now, we have 4 or 5 digital banks opening up. They'll go through the same thing. Because the biggest problem that they'll face is all of our money is in physical cash stored everywhere. That's the problem with the unbanked.
You have to go
so you have to
grab
go there.
it.
Yeah, you have to actually grab it and then convert it into digital money. How do you, if let's say I open up your digital account right now, you have, let's say, 100K sitting in cash today. That account, how does that 100K translate to 100K in your app? Or then you have to find an agent, then give him that cash or a branch or whatever, and then convert that into digital money in your wallet. So there's that intermediary step that you have to take. Again, that delays the process. So it makes the process much more nuanced. It's difficult, yes, it's operationally more intensive, but that's just how a market needs to mature. So I wouldn't say that that's a bad thing. It's just something that we as founders and we as fintech participants have to understand and appreciate, that these things will take time and we have to be cognizant of that speed.
But in terms of just to understand this gray market, how it works, so it means like physical people will go and meet those businesses. Like you need to meet, I don't know, because I'm taking a sales perspective. You need to meet, I don't know, every salesperson had to meet, I don't know, 20 businesses per day, or just come and have that business one after the other to really try to explain them.
So that's where Muawin started.
Another life.
So that's where, again, true, but that's where our strategy changed slightly. So
right,
our strategy was more B2B focused. So instead of going directly to our borrowers, we would never go directly. So we would always have somebody in the middle that we would use for data acquisition. So let's say, take an example. So we were the first ones to do fuel financing for ride-hailing drivers. So that would be Uber, Careem, Yango, and Drive.
It's like very small, nano financing almost. No, it's very small amounts.
It's slightly more than nano, but again, because an Uber driver drives his car quite a bit, and fuel is quite expensive. Or if you want to drive more, then that just means if I can give you more fuel in your car, you will drive more, you'll earn more. So again, goes back to the philosophy of I can earn more. But I don't then run ads online saying, Uber drivers, please come to me. What we built that product actually with Uber's backing and help.
With Kareem directly.
So the first thing was, actually Uber came in. This was 2019 or 20, I'm forgetting the exact year. Uber came in saying, all our drivers are struggling. They are good rated drivers, 4.8 plus. But again, because customers are now paying with debit card and credit cards more. It takes time for them to get the cash. So they're struggling with working capital. What can you do? We created a system with Uber, Shell, and then ourselves, which meant that when Uber
it's like a triangle.
Exactly.
Uber, Shell, and you.
Uber would give us data. We would use that data to credit score. We would then send out a message to only those pre-approved selected Uber drivers using Uber's call center, Uber's platform as well. So then a driver who got a message from Muawin already knew that Uber has vetted us as well. So he doesn't have to worry about, who is reaching out to me? Why do they have my data? It's Uber signed off. Uber is helping us, and the driver can then download my app, fill out his form, get his loan approved, and then go to any Shell petrol pump across Pakistan, swipe his card, and get his loan active. So instead of us then directly going in and, as you said, educating drivers, telling them how they should come onto the platform, then getting them to apply, and then actually giving them a decent credit score, then figuring out what their risk would be, what their pricing should be, using Uber as a pathway to the market, I was able to lower that cost. So that product was then scalable, because then Uber, the same thing would be done with Kareem, their sister company at that time. Then InDrive comes in, then Yango comes in, and there's other players as well. So as a logistics financing platform, that was very easy to then scale, because it was always B2B. Muawin has never, and I hope will never, go directly to a borrower. Our approach has always been, in a more traditional banking sense, would be supply chain finance, where there's always somebody at the top who actually is controlling the supply chain, and then there's a entity at the end who is using those items or procuring from within that supply chain. We stand in the middle to provide trade credit. So traditional corporate finance, that is how it would work. But we come in, work with the supply chain owner to provide credit to their users. So in ride-hailing's perspective, that was Uber, Kareem, InDrive. In retail, it's other brands. So it's FMCG brands that we would work with. In agri, it's seed manufacturers, it's fertilizer companies. But they're the ones who we go to first, and then ask, fine, your farmers are already struggling. They will go to credit. They will find credit from their local families and loan sharks as well. Why don't you give me the data of how much these farmers have been buying from you in terms of seeds? I'll use that data to figure out how much I should lend to him, and then get the farmer only those seeds. I've never given cash as well. Purely inventory. Purely goods. That's it. You get what you need to run your business. So for Uber, it's fuel. And the funny thing is, that's the first product we were able to scale internationally as well. So Muawin was able to then go into Indonesia, because it was a similar ride-hailing heavy country. And we found another
There's Grab there.
Yeah. So we found another entity that was just wanting to do fuel financing for their ride-hailing company. So they just took our tech and then set it up there.
So that was the first time getting international?
Yeah, that was the first time.
Through that use case, actually,
exactly.
of fuel funding. Actually, it was part of my question. You stole my question. Because I would like, at first you were telling me that you are working on both sides, which is bringing those people from gray economy to maybe financial institutions and so, and also you are relying on other merchants and maybe financial institutions to be able to grab those a little chunk of the market, right? There's like both sides.
So right now the financial institutions don't really come in, because we are a financial institution ourselves. But we do work with, now the idea is to work with other financial institutions as well, because we're at that point where we've proven that these products work, that our borrowers are now worthy of getting credit. They have their own formal credit scores as well. So now we will open this up to banks and other lenders to please work with us to actually scale this up. Because at the end of the day, there's only so much that fintech companies can raise. We are a fraction of what the formal market in Pakistan is. We have 40 odd banks in Pakistan that are massive, that do actually need to increase their SME financing ratios. So now, if we've proven that our loans work, our borrowers are decent. So now opening it up to different lenders is where Muawin is currently at. But through this time up till now, we've been the lender because we hold the license, and we've been working with other brands to get their data to provide credit to their customers. So that's why the B2B approach is what we have really set ourselves as our niche.
Amazing. And what are the key indicators? I'm coming back to the expansion because I think it's very interesting, and it's very hard sometimes from especially a fintech or a startup coming from an emerging market to go somewhere else.
Yes.
Because it's like there is big challenges, how I'm going to fund this development, investment wise. And so what were the key indicators that like Muawin is ready to go international?
So
it happens after 3 years?
It happened after, I would say, 3-ish years later.
3 years of existence. Okay.
But again, so there's the more academic answer that you would give, that once you can say product market fit has been achieved and you're a certain size, you've done enough, there's a strong enough brand value associated with your name that you think now you can go abroad. But the true answer is, honestly, it becomes very tactical. It is at that point where you need to, especially if you're venture backed or if you're trying to raise capital as well, being in different markets was always seen as a stamp of quality that the business has made it. Again, is that a catch-all? Does that solve everything? Not really. You will find regional startups that tried to go international that weren't able to sustain themselves as well. But the good thing with the niche that we have is that SMEs exist in every developing market, and in every developing market, especially if their financial markets are still maturing, they will face the same problems. So if I can showcase that my product market fit was achieved, that the niche that we chose, that the tech stack that we made, that the products that we were delivering actually helped our borrowers, then you should be able to find similar markets that you can either go into as a tech-enabled player, and you're just working with existing entities there to just help them move into your niche, or you can actually, if you have the capital, get your own license and set up formally as well. As a lender, getting loan books and getting the money to lend, because if I don't have money in my account, then I can't lend to you, of course.
You need also, you need to solve the problem that you are solving for others.
Exactly. So your war chest, your impact is always linked to what size your war chest is. Your war chest is never going to be enough. That is a fact. Most lenders across the world, eventually they're either looking for debt lines from banks to then build their own balance sheets, or they're looking to work with banks to then provide credit. I honestly stand for, in this perspective, there's a title that came out called co-lending, where the fintech and the banks work together to actually fund one loan. It was done in corporate banking for ages, where you would lend to one Citibank, different banks would come in and they would create one structured loan product for a massive entity such as, let's say, Nestle or Unilever, because again, they were too big for one bank to lend to. In SME finance, that was never really viewed to be the case, because SME loans are quite small. A simple lender should be able to take it. The problem is, it's not that single loan. The fact is, there are 1,000 people like him, and they all need to be given credit. And then risk suddenly starts to multiply. A fintech could say, I'll start giving out credit, but if there are, let's say, hypothetically speaking, there are 1,000 SME borrowers in Pakistan. At max, I would hit what, 100? That's 10%. At being very generous about ourselves. How do the other 900 get served? For that's where the banks need to come in. That's where certain such structures, such as, again, India has done good work in this, Bangladesh has done good work in this, where co-lending models come in, where the fintech and the banks really go in together and actually start giving out loans.
In Pakistan, it exists, the co-lending model?
So Pakistan is now, we're working on it. There are different fintechs who are now trying to do this, Muawin amongst them as well. For that to work, you would still first need to prove the hypothesis that these loans are safe, that these loans and these products can be delivered, and the bank then would come in.
But now with your data for 5-6 years, you have that maybe most of the loans are. That's
why, again, even not just Muawin, with other fintechs in the market as well who are now on this journey. So that's the good thing, is that after
you have enough data now.
Exactly.
Finally.
The market has matured to that point where everybody now feels that the fintechs have proven our merit. We aren't young companies just trying to cause disruption for disruption's sake, because then the banks can't and should not actually start into this ecosystem. Now that we've done our job, that was my job. My job was I'll go into the grey economy, start lending, build a good product stack, and once it's mature, go to the banks and say, fine, now it's your responsibility as well. Because our customers are SME customers. State Bank has for every year given SME lending targets. Now the banks should come in and be able to say, yes, of this portfolio, I will, let's say, take 50% and I will start lending. You have the customers, you can use my lending rules, fine, but use my lending capital as well. So that allows us to then grow at a much faster pace. Because impact impact in our local market is the main KPI here. I do not want to just say that any fintech, be it us or whoever, is just trying to capture the market and be a one-all king in this. We cannot. Pakistan has X amount of banks and they're all pretty big at this stage. Of course, some of the big five are very different, but
big dinosaurs, I talk of them.
but that they have the money. They have their war chest of what we actually need to create that impact. So if they want to hit SME financing targets, if they want to hit agri financing targets, please now work with us and we'll help you achieve them. And that's how it's worked in developed markets as well, and is working in other developing markets as well. So the models are pretty much the same.
Amazing. What lessons you learned after the 6 years of operating in emerging market? You've been in Indonesia, other markets also?
So no, we're trying now in other markets, but Indonesia and Pakistan is where I would say Muawin's own footprints are. Yes.
Okay. What are the lessons that you learned and can maybe a fintech startup can learn from and make maybe less mistake at this stage?
So the thing is, after 5-6 years of being a founder for my own entity, and then having before that been in other startups as well, the problems sadly have remained the same for every founder that you talk to. If you talk to people even in our region or internationally over the last 4 or 5 years, especially when venture capital was cheap, we all made the same mistakes. We all were burning money very quickly. We all were trying to grow very quickly. Our main metric was size. That was the main thing that we were trying to, because again, there was this weird notion in our head that there's only going to be one winner in each segment. That has proven to be not the case at all.
Especially in emerging markets, I think.
Especially in emerging markets, 100%. Because the market, when you come into it, the problem set is so large. How could there be one winner? But that's what we were being told.
This is a capitalist kind of mindset, I think. That comes from the US and the Europe. There's like just one winner.
Yeah, but that's the thing. It was coming primarily from the people who were funding us. So it was not just the founders who were taking this mentality. It was just, we were told that was a mission, that you had to grow at X speed.
And be the monopoly.
Exactly. Everything revolves around you. And for that to happen, then you need to burn a lot of money. And that money, when that money dries up, then you're kind of stuck. And you really haven't either.
That's a very interesting insight. I've never thought of it, but it's true.
No, it is. And the sad part is every founder fell into the same hole. Over the last if you look at the last 2 years of when post venture capital kind of drying up, and that's a global phenomenon. It's not just for Pakistan. I guess Pakistan has unique problems to ourselves, again, which other people have definitely not faced. But venture capital dried up around the world. Every founder has had the same problem of, okay, fine, now how do I just ensure that the runway continues? How do we keep the lights open? How do we ensure that, do we need to then again scale down? But I thought scale was the main arbiter. So now why are we scaling down? Sadly, we have not yet seen, unlike in other markets, locally in Pakistan and in this region, mergers really have not happened at that point. Especially there are certain startups or certain niches that you could argue might be better served if those entities really did merge as well. And maybe that's a sign of, as things mature, that might happen.
Or acquisition also, maybe from bigger banks.
Acquisitions would only happen once you actually are either seen as a threat or the product set has been proven to really, the product, the services you were delivering, that there was no holes or no gaps in it. Banks right now buying entities, I would say it's a bit too early for it. Okay. But investments and giving out, trying the market out, yes, that they've started. Okay. Wholesale acquisitions were 100% they're owned by the bank. Right now they're keen, they're happy with just having a foot in the door, knowing that they're there, but letting the fintech market mature to a certain extent. And that's the right way to do it, primarily because, again, as you said, delivering these products is not really a straightforward process. There's going to be a lot of tweaking, a lot of mistakes made as well. And once the banks have acquired it, then they own all those mistakes. Right now, they can at least give us, let's say, the founders, the ability to, here's money, solve the problem, show me that it works.
I call it fund the failure.
Yeah, 100%. Hopefully, right now, the failures don't happen. But yeah, but if those failures don't really happen, if you don't make those mistakes, then
it's necessary.
The data. Then the data that I'm saying, I have lots of data. If I'm just showing you positive data, then that just means that I played with the data as well. Because you cannot really create a fully sanitized portfolio. As a lender, if I'm just giving you a clean portfolio, there's something really, either I was too selective or there was some gaming. Because again, why didn't you get bad customers? So what was really going on? So in each use case, that should happen. Banks should actually ask for it as well. But at the same time, now there has to be some sort of appreciation that the fintech market has done a decent job, and not just about Pakistan, regionally as well. Over the last decade, we have proven that our customer set did exist. We weren't making customers up. Those problems did exist as well. The way that we were serving them is valid and tangible. Now, the formal market needs to come in and kind of help us along the journey to the next phase. Once the market is matured, brilliant, come in, buy us out, scale it, then yourself. The main problem or learning that I at least have had, and again, this is a purely debate for other founders as well, is that in the fintech domain, move fast and break things, that philosophy that we've always had does not really work. Because our responsibility of actually helping people either run their businesses or in the payment space or actually with investments, our responsibility is extremely high. So we as founders need to be aware of that, of the role that we're playing as well.
I just would say it very quickly, maybe we can wrap up with this. We were saying that at first you were just measuring how many consumers you have, how many SMEs you have maybe. What are the key metrics today that we can maybe take in charge in terms maybe of impact, of inclusion, because I have a problem also just like tracking the financial metrics only for startups in general, or the size of your consumer base in a fintech, for example. What are the other key metrics maybe that should be taken into consideration?
So for me, again, it's very straightforward. It is. And it's difficult to calculate because it's not really stated, it's not something directly achievable in our app. So we actually have to run different surveys and actually talk to the borrowers. But it's essentially how much you've actually improved your net income post our loans. So what were you making before and what are you making after? If there's an X percentage jump in it, I'm doing my job. That is for me how I would measure my product market fit. The number of users, Pakistan is such a big market.
It's a false metric.
It never really ends. You can keep on going, and mashallah, and inshallah you should. That you never really should stop scaling. But the main metric that you have to really go back to is, if I'm giving out a loan, what impact does it have on my borrower? And if you are having a positive impact, that borrower will be the one who actually goes and talks to his friends, his people in the same space. Because our borrowers, especially in the retail space, and you've seen how traditional brick and mortar retail works, they're all sitting together in one line, they're all around each other. If one of them actually is better off using Muawin, for sure he will tell his friends, he will tell the people around him. And that's where the organic growth starts to happen. So focus has to be on, are they better off? If they are, perfect. The top line metric of how much money you're disbursing, what's your loan book, brilliant, perfect. That's a good metric to have. Does not prove whether your product is actually working. You could be stuffing the market as well. You could just be stuffing, and again, giving away money is the easiest thing to do, especially in developing markets. I could literally stand outside.
Everyone will take it.
Exactly. Lending is not a problem. ensuring that
Taking it back.
taking it back as well, but that is for a purpose. If it's for a purpose, they will give back. That is not an issue.
I think the other, I mean, like we're gonna go further, is like the real impact it has in these people's business, but this is gonna be more tricky to measure. How do you see the fintech in the next 2-3 years? Because 5 years, I think, is a very big time to
and things move very quickly.
Very fast, exactly. The 2-3 years, maybe. How you see it?
So the thing is, the last 2-3 years were pretty tricky. Money had dried up. We were used to raising good capital in Pakistan, and people were looking at us as well.
Mostly internationally.
Mostly internationally, yes. Local investors they were investing, but primarily through the international entities as well. So that market, they do need to come back, and they are. I'm not saying they're not. Any startup that has gone through this period of pain is better off for it. So they are now, not just myself, but other entities as well. I can truly say that they've done a brilliant job in actually sustaining themselves through these difficult times. We are slowly moving away from just very basic metrics of conversion to actually understanding what the users require. So that's a good industry level change. And now use cases are evolving as well. So there are, again, thanks to the regulator, but there are new things coming up that is good in a purely what is available in the market perspective. But the main change that we would need to see is local investors and local money, because Pakistan, there's a lot of capital locally as well that we don't need to go internationally. Hopefully that they should be coming back. So the next 2-3 years, that would be the ideal way for us to actually sustain ourselves and build a decent
Any other
market.
expansions?
Hopefully, let's see. That's a
GCC market? No, not an option, because I'm actually so surprised that you've been to Indonesia. But I know Indonesia is like 260 million people, so it's like
that's now
a little bit bigger than Pakistan.
No, GCC is definitely part of the plan. GCC is, again, similar markets. You would then need to focus on which markets you choose, because as you were talking about Morocco, some markets are fairly small as well. Similar problems throughout. But then you need to be very careful of okay, where do we need to go in as a licensed lender, or are we going as a tech-enabled player, or are we going to work with banks? Because here, getting my own license was fairly straightforward. In Indonesia, it's more of a SaaS play. We're giving out our tech to other players. So it depends on what approach
what
would
model
work.
will work for any country.
Exactly. And then getting the loan book as well.
Anything you would love to share that we maybe haven't the time or space to talk about it?
Yes. Every founder should should find time to actually go back to universities and actually help create the next stream of entrepreneurs as well.
That's what you are doing, and congratulations for that. I'm so happy that you've been doing it, and you've been like giving back, and you create, we can say it, you create the curriculum of fintech at LUMS.
Yes.
And you had already like Helpay was born from this curriculum.
Done. No, that was actually it's been a personal passion, and I honestly think if we're not the ones to do it, then where will it happen?
That's what I'm here also. I came from Morocco, from Paris, and from Morocco. It's like if we don't create the change, we will wait forever the change for happening.
It is our responsibility. So every founder, every entrepreneur, the time is now go back to universities.
Has to contribute in his own way.
Help write case studies, help like local papers, give out data for research, help local academics create content around it. Because again, that's, as you said, that's how the change will really start. That's how people get excited about this as well. Because there's a lot of work that is not getting highlighted and that is not then being given the time to shine. And people sometimes think that by opening ourselves up, we're giving away our secret sauce. Trust me, we aren't. The secrets, every fintech model around the world, at the end of the day, seems to be somewhat connected, somewhat similar. They're all in similar veins, but the operational realities of each market are very different. So the secret sauce is actually how I run my business, how the startup actually sustains itself. So it's not the business model itself. SME, working capital finance, has been around in different markets for many, many years, and some of them are doing it much better than we are in terms of scale, in terms of size, in terms of funding. India has lots of Muawin likes there, and they're doing very well. Same thing for Bangladesh, same thing for Africa. So why should I hide my model? The impact actually would be, can I get the next 3 Muawin-like entrepreneurs excited in Pakistan?
Exactly, and build that education and also help us mature the market faster.
100%.
That's the objective. Thank you, Hashim, for this amazing, transparent discussion.
Pleasure is with mine.
I hope that it will have some information that will serve, as we say, the students, the wannabe entrepreneurs, the first-time entrepreneurs who are entering the fintech ecosystem, and maybe help them a little bit understand the struggle of emerging market. Yeah, there is opportunities, but there is some struggles also. So like opportunities comes together with that.
Yes, 100%.
There is no choice. Thank you again for this time. Ramadan Mubarak. Tomorrow is Ramadan.
Okay, Mubarak.
and see you soon.
Thank you.